Hello everyone, I hope you're all doing well. I want to talk with you today about Bitcoin and what I see coming in the next year or so. I want to bottom line things, so those of you that are looking at buying and holding Bitcoin as an investment know why you're doing that, and you have an intellectual basis for understanding your investment decision. This is not financial advice. I'm a technologist that understands both computing and finance. So take this advice for what it is. Okay, Bitcoin is a cryptocurrency that has a fixed supply. There'll never be any more than 21 million Bitcoins. It's a programmed disinflationary currency. Traditional or paper currencies of the world are all inflationary. Central banks and governments can create as much of that currency as they want, and the result is inflation. What is inflation? Inflation is a general rise in the prices of goods and services in an economy over a period of time, which results in a drop in the purchasing power of money. Inflation is the starting salary of a graduate computer scientist of $35,000 21 years ago, which is now around $80,000. Inflation is a small house on land in inner city Melbourne, which was $320,000 in the year 2000 and is now over $1 million. Inflation is going to the supermarket and seeing the prices rising over time. We live in an inflationary world, and we need to invest our money in assets that preserve and increase our purchasing power over time. Some people invest in property or real estate, some in gold and silver. Others invest in stocks, bonds, and financial products like pensions, and so on. Some people diversify and invest in each of these asset classes. So what is it about Bitcoin that has technologists like myself and big financial institutions so interested in it? Bitcoin is early on in its path to monetization. It's becoming digital gold. To some of you, that will sound ridiculous, but it's true. How can gold be digitized? Well, think of it as a dematerialization. What is that? Think of the functionality that computers are able to digitally, think of what computers are able to provide digitally that replaces analog technology. That's a digital clock instead of an analog wall clock. That's a digital calendar instead of a walled one. It's MP3 music played from your computer instead of from a cassette tape. Many analog technologies have become digitized. Fiat currency or paper money is also digitized. The money that makes up your bank account is not all paper money. It's zeros and ones on a computer. Gold is a precious metal that takes vast amounts of energy and manpower to dig up out of the ground. Bitcoin is a precious digital asset that also takes a lot of energy to mine, in terms of computing power and especially electricity. The problem that us computer scientists had in the past when creating digital money in the form of cryptographic money or cryptocurrency was there was no practical solution that had been found for the Byzantine generals problem. Bitcoin solved this with its distributed ledger and a blockchain. The solution to the Byzantine generals problem means we, the people, do not have to rely on corporations, governments, or trusted intermediaries like banks or other middlemen in the way that we used to. Instead, we can put our trust in cryptography, which is much more reliable. And now we can do business with each other, peer-to-peer, with no central authority hanging over us, telling us that we can't do that. To learn more about the Byzantine generals problem, you can check out a video that is on my website. So, I saw the writing on the wall 4 years ago that Bitcoin would become digital gold. And since then, I've been investing heavily into Bitcoin. Bitcoin is the only asset on Earth that cannot be increased in supply in response to increased demand. When prices rise in the real estate market, what do we see? We see developers come in and increase the supply of homes and apartments. When precious metals markets increase in price, miners mine more and increase the supply of gold and silver in the marketplace. When corporations see an increase in demand for their products and services, they increase them. They increase the supply and they hire more people to create more supply. As we've seen during the coronavirus pandemic, the same goes true for currencies. The central banks and governments of the world have increased greatly the supply of fiat currency in response to the crisis at hand. Every 210,000 blocks, or roughly every 4 years, the Bitcoin block reward is halved. This will go on into the future until the maximum supply of 21 million Bitcoins has been generated by the network. Block rewards are the Bitcoin that miners earn for verifying transactions on the Bitcoin network. Every 10 minutes, a block of transactions is added to a block, which is added then to the Bitcoin blockchain, which is the distributed ledger of all the transactions that have occurred on the Bitcoin network. What started off as 50 Bitcoins per block in 2008 reduced to 25 Bitcoins per block 4 years later in November of 2012. 4 years after that, in July 2016, we halved again, 12.5 Bitcoins. And in May of 2020, the block reward halved again to 6.25 Bitcoins. Think about the number of Bitcoins mined per day. In the period before the first halving, there were 7,200 Bitcoins mined per day. During the second halving, there were 3,600 Bitcoins mined per day. The last halving period, there were 1,800 Bitcoins mined per day, and since March 2020, there are just 900 Bitcoins mined per day. Now, if we extrapolate out into the future, reducing the block reward by half, we get this interesting result, as can be seen on the screen right now. You can view a countdown of the Bitcoin block reward halving at this link as well. Now, the reason why you hear all sorts of very high predictions about the price of Bitcoin in the future is because of how scarce the asset is and how much scarcer it gets every 4 years. I first started investing in Bitcoin in early 2017 when the price was just $2,800 Australian. This was in May 2017. It was in July 2016 that the second block reward halving occurred. I first started investing in Bitcoin 10 months after that halving event occurred. And what I saw was that past halvings resulted in large parabolic increases in the price of Bitcoin. And I suspected the same thing was about to happen in 2017, which it did. We all know the end result, when Bitcoin hit a record price of almost $27,000 Australian in December of 2017. What happened next was the price crashed, and it's taken 3 years to reach and now surpass its previous all-time high. I want you to think about the block reward halvings and what's going on in the marketplace at the moment. In 2020, the block reward is 6.25 Bitcoins, and the number of Bitcoins mined per day is 900. Word on the street is the majority of the 900 Bitcoins mined per day are ending up in the hands of just a few large corporations, PayPal, Square, and the Grayscale Investment Trust. Just 3 companies that are gobbling up the entire daily mined supply of Bitcoin. Now think about what will be happening in 2024 when the block reward is 3.125 Bitcoins and just 450 Bitcoins are mined per day. Between now and then, the demand for Bitcoin is likely to increase massively, whilst the block reward supply will be cut in half. And so it goes every 4 years into the future until all the Bitcoins are mined by the year 2140. In the future, when we look back, we will see just how early it was with Bitcoin to be buying it after the second halving. By the time I'm 70 years old, in the year 2048, there will be a Bitcoin block reward of just 0.048 Bitcoins, and 7 Bitcoins will be mined per day. There are 7.6 billion people on Earth as of 2018, and projections are there will be between 8 to 10.5 billion people by the year 2050. There are currently 4.6 billion people on the internet, which represents 59% of the global population. Very few of these people own Bitcoin at the moment, with some estimates that just 0.1 to 1% of the global population owns Bitcoin. And when I first started buying Bitcoin in early 2017, there were approximately 5 million users of it worldwide, and this has increased substantially to around 100 million users today in December of 2020. There are some stats about that at this link on the screen now. The internet needs a native currency, and I think it's very likely that it will be Bitcoin. I would go further to say that I think Bitcoin will become the #1 most valuable currency in the world in the future and will become the global reserve currency of the world. This is going to happen due to the properties of Bitcoin, and particularly due to its scarcity in comparison to fiat currencies. Bitcoin is fungible, non-consumable, portable, durable, highly divisible, secure, and it cannot be counterfeited. It's easily transactable, it's scarce with a fixed and proven supply. It's decentralized and is smart or programmable money. Over time, the population of the world increases, the number of internet users increases, the number of those users that require Bitcoin increases, whilst the supply of Bitcoin decreases. The price over time will be up, and up considerably and substantially. Bitcoin, I believe, is the best asymmetric investment opportunity in the world that anyone, anywhere, can take advantage of simply by buying and holding Bitcoin as a reserve treasury asset, in the same way that Michael Saylor did at MicroStrategy. Michael Saylor's decision will go down in the future, I believe, as one of the most brilliant business decisions by a CEO of all time. In December 2020, at the time that I'm making this video, just 3 large companies are buying up the entire daily supply of Bitcoin that is mined. What on earth is this going to look like in the future as more and more people and large corporations and investment funds make the decision to buy and hold Bitcoin as a reserve treasury asset? The price will increase to an extremely large number. Remember, the asset is fixed in supply, and if you're watching this video, you're alive at a time to take advantage of the opportunity that Bitcoin represents. In the future, you'll look back in amazement at the low current price of Bitcoin, and you'll kick yourself that you didn't buy it or buy more of it. The price to acquire one whole Bitcoin is already more than the vast majority of people on this planet can afford. It will become harder and harder to own one whole Bitcoin in the future. And those of us that own a lot more than one Bitcoin will be very wealthy. You don't need, however, to own one Bitcoin, as you can buy smaller amounts of it. It's highly divisible. When you hear of price projections of $100,000 plus per Bitcoin, it's because of its fixed supply. It's because of the increasing number of individuals and large institutions that are buying Bitcoin as digital gold and using it as a reserve asset. It's because of the central banks and governments of the world continuously increasing the fiat money supply. And this money ends up increasing asset prices, as we've all seen, with how the stock market and property markets have all increased substantially, even whilst productivity has been reduced by the coronavirus pandemic. If you've not noticed this, then you're not paying attention to what's going on in the world. This is the first time the man behind the curtain can be seen so easily, and so many people are at last questioning the fiat monetary system that we all live and all work under. It's because the block reward halving every 4 years reduces the supply of Bitcoin available to purchase. It's because Bitcoin is the only asset in the world that cannot be increased in supply when demand increases. Don't be under any illusions. Bitcoin is going to win. The market recognizes this already. Look at the market cap in comparison to other cryptocurrencies or altcoins. The key to wealth is to recognize when an asset has reached a stage that is unstoppable, and Bitcoin reached that stage some years ago. Most people, however, have simply not taken enough notice and not looked into it carefully enough. Now, my degree in computer and math science and my background in supercomputing made it easy for me to recognize how important Bitcoin was when I first came across it. I'm a born skeptic, so when a skeptic like me is raving about anything, you should probably listen, as it happens so very rarely. I've always been interested in finance and economics as well, so it was easy for me to see very quickly that I was looking at the most important innovation in computer science of my generation, as well as the most important asset I would have the opportunity to invest, and invest early in, before the majority of the population woke up and realized the opportunity. Being able to front run or buy Bitcoin early before most people, and especially before the big financial institutions understood it and bought it, has been very satisfying. I was able to buy at a low price what other people are paying much higher prices for, and it's still so very early. The stock to flow ratio of an asset is defined as its years of inventory relative to its supply. Bitcoin is currently on par with gold, and by the next halving will be over double the stock to flow ratio of gold. 2024, after the next halving, is when we get into uncharted waters. Remember, every 4 years the block supply reward of Bitcoin is cut in half, and that also means that the stock to flow ratio approximately doubles. Bitcoin in just a few short years will have the highest stock to flow ratio of any asset, and looking far into the future, the price of the asset will shock even the most hardcore Bitcoin maximalists. Anyway, I hope this video has been enlightening. Remember, I'm a degree qualified computer scientist with over 21 years working in technology. I provide a Bitcoin consulting service. If you're interested in the service, you can check out this link that's on the screen now. All the best, everyone. I'm Clarke Towson.